Welcome back to the winning journey, investors. Today, we are tackling a company that is as controversial as it is intriguing. Palantir Technologies was founded in 2003 and is one of the well-known companies for building comprehensive data analytics platforms. The company provided service to Western government by analyzing data for vital national security and intelligence requirements through its Gotham platform. Now, with their entry into the commercial sector through the Foundry platform, which is aimed at serving businesses of all sizes, we try to answer the question whether Palantir is a good stock to buy. Let's get started. Let's start with the good news. Palantir has some serious strengths. Up first, it is phenomenal to witness such a young company, still actively engaged in the AI revolution, which is important for the company to grow, and allocate tens of millions of dollars on research and development. They are not just claiming to be action, to use buzzwords and do nothing. They are, in fact, taking radical steps in crafting powerful, complex organizational decision-making technologies. A key differentiator is Palantir's unique ontology framework. What exactly is it? Rather than working with disconnected data, Palantir constructs an integration of Cambridge and Pennsylvania, an entity in the state, relationship analytics that specializes in evaluating and interpreting the information in the context of an institution. Building a digital twin will let the business simulate different operational scenarios and devise ways to facilitate optimum business functions. Analyst Mark Giorelli at Morningstar puts it this way: Palantir differentiates itself as the only AI company with a framework that organizes disparate datasets and facilitates optimized decision-making. This is a significant advantage because it allows Palantir to offer more comprehensive and tailored solutions compared to companies that rely on traditional data analysis methods. And this isn't just theoretical. The impact is showing up in their impressive revenue growth, particularly in the U.S. commercial sector. Q4 2024 saw a 36% surge in overall revenue, with a whopping 64% increase in U.S. commercial revenue. This demonstrates how Palantir is achieving significant traction in the commercial market. To top it off, they closed 129 deals worth over $1 million each in the last quarter. These deals are not just about quantity, but also quality, as they often involve long-term partnerships with major organizations. Palantir has enjoyed strategic and long-standing partnerships with government agencies. Many of its clients are Western governments, and its role in national security is undeniable. While we can't dive into the details, it's clear that Palantir's technology is critical for defense, intelligence, and law enforcement agencies. This provides a stable revenue stream and validates the effectiveness of their technology in high-stakes environments. Finally, let's talk about money. Palantir has a solid financial position. As of December 2024, they had nearly $2 billion in cash and $3.1 billion in marketable securities, with absolutely no debt. That's a fortress balance sheet that gives them the flexibility to invest in growth and weather any economic storms. And with 2 full years of GAAP profitability under their belt, the future looks bright. This financial stability also allows Palantir to pursue acquisitions and other strategic initiatives that can further enhance its competitive position. All these successes have us wondering, how does Palantir's unique AI approach truly set it apart from the competitors in a way that creates real value for its customers? We'll be answering that question next, so stay tuned. Now, let's talk about the other side of the coin. While Palantir has undeniable strengths, it's crucial to acknowledge the potential weaknesses that could impact its future performance. And, as always, we're referring to the insights of Morningstar's analyst, Mark Giorelli. First up, valuation concerns. Palantir's stock has soared, but is it justified? Currently, the stock trades at a very high premium compared to its actual earnings and even its projected earnings. This is not entirely uncommon, but it's something to take into consideration when deciding whether to purchase or not, especially when considering the risk. To get a clearer picture, it's useful to compare it to some of its peers in the tech and data analytics space, like Snowflake and NVIDIA. While these comparisons are not perfect, each company has a unique business model, they provide a valuable perspective. For example, Palantir trades at a much higher price-to-sales ratio than Snowflake, despite having similar growth rates. And while NVIDIA's growth is explosive due to the AI boom, its price-to-earnings ratio is still lower than Palantir's. That's the first weakness. But how much of a premium is too much? And at what point does the potential upside outweigh the valuation risk? These are critical questions every investor needs to consider. Next, we need to examine Palantir's dependence on government contracts. While these partnerships provide stability, they also expose Palantir to the whims of political changes and potential budget cuts. Giorelli noted that about 40% of Palantir's revenue comes from the US government. Moreover, the news that CEO Alex Karp planned to sell a significant chunk of its stock further spooked investors, highlighting potential concerns about the company's long-term prospects. Let's face it, government contracts can be lumpy and unpredictable. A change in administration or a shift in priorities could lead to a significant reduction in Palantir's revenue stream. Another important factor to consider is total addressable market, TAM, uncertainty. Estimating the potential size of the market for Palantir's products is challenging, and the range of estimates varies wildly from 1.2 trillion all the way up to 1.8 trillion. Mark Giorelli notes that TAM size is truly a trillion-dollar question that is unfortunately laden with assumptions. This uncertainty makes it difficult to accurately assess Palantir's long-term growth potential and assign a fair valuation to the stock. Finally, let's not forget about volatility and market sentiment. Palantir's stock has been known for its wild swings, and it's highly sensitive to news events and overall market conditions. The recent crash in its stock price serves as a stark reminder of the risks involved. This volatility can be unnerving for investors, especially those with a low-risk tolerance. If market sentiment turns negative, Palantir's stock could experience further declines, regardless of its underlying fundamentals. So how can investors navigate this volatility and make informed decisions? Now that we've explored Palantir's strengths and some of the weaknesses that are inherent, a very important question arises. What are the key factors that could drive Palantir's stock price higher or lower in the future? Stick around, because we'll be answering that question next. First, AI adoption and commercial expansion. Palantir's future hinges on its ability to successfully penetrate the commercial market and demonstrates the value of its AI-powered solutions to a wider range of businesses. We are always looking at how Palantir might follow in the footsteps of Salesforce and Oracle. Specific partnerships and initiatives, like collaborations with xAI and Amazon Web Services, are key indicators of their progress. Second, government spending and the political landscape. Palantir's deep ties to government agencies mean that its fate is intertwined with government spending policies and political priorities. There are warnings about cutbacks in government spending, on which the firm heavily relies, sending shares into a tailspin. The potential implications of a Trump administration on Palantir's government contracts are particularly noteworthy, given Peter Thiel's close ties with Trump. Any shift in government spending or political priorities could have a significant impact on Palantir's revenue and profitability. Third, overall market conditions and investor sentiment. Palantir doesn't exist in a vacuum. Broader market trends, particularly those related to technology and AI stocks, can significantly influence its stock price. Remember, investors are often driven by emotions like fear and greed. Shifts in investor sentiment, whether positive or negative, can lead to dramatic swings in Palantir's valuation, regardless of its underlying fundamentals. Of course, a key question for investors is what all this means. Can Palantir successfully navigate these challenges and capitalize on its opportunities? All right, you've made it this far. So let's dive into some bonus insights for those of you seriously considering Palantir. Given its volatility and growth potential, what's the best approach? First, think about your investment strategy. Are you a long-term investor with a high risk tolerance? Or are you looking for shorter-term gains through swing trading? Palantir may be better suited for long-term investors who believe in its potential to disrupt industries with its AI solutions. Next, assess your risk tolerance. Palantir is not a stock for the faint of heart. As we've discussed, it's prone to significant price swings. If you're risk-averse, you might want to allocate a smaller portion of your portfolio to Palantir. or consider other, more stable investments. Speaking of which, what are some alternative investment options? There are many other companies in the AI and data analytics space that may be worth exploring, like C3 AI, Snowflake, or even established tech giants like Microsoft and Amazon, who are heavily investing in AI. Finally, and this is crucial, stay informed. The world of AI and technology is constantly evolving, so it's essential to keep up with Palantir's latest developments, partnerships, and financial results. So, is Palantir a good stock? The answer, as you might expect, is it depends. Palantir has great AI, strong revenue growth, and solid government ties. The risk is overvaluation, volatility, and government influence. Before you buy, remember Palantir's high uncertainty rating. Do your own research and consult a financial advisor. As for our verdict, Palantir is a hold. Thanks for watching. If you found this analysis helpful, please like this video and subscribe for more stock insights. Don't miss the next video. We're going to help you with another asset, gold. Is this a never-stop bull run or another financial bubble?